What happens if you don't file sales tax? Sales tax might not be the most exciting part of running your business, but ignoring it can quickly become one of the most expensive. In this video, we'll break down what really happens if you don't file or pay sales tax, how states respond, and what you can do to fix the issues before they grow. When it comes to sales tax compliance, time works against you. Once your business establishes nexus in a state, whether through physical presence or by crossing that state's economic threshold, you're legally required to collect and remit sales tax on sales to customers in that state. But if you don't start collecting when you're supposed to, that responsibility doesn't disappear. It shifts entirely onto your business. For example, if you sell $500,000 worth of product into a state with a 7% average tax rate and you never collected the tax, the state still expects that $35,000. And that is before penalties and interest. Across multiple states and multiple years, that unpaid liability can grow quickly. So what happens if you don't file sales tax? Even if your business correctly registers in a state for sales tax, but then you miss sales tax filings, states see that as non-compliance and they will take action accordingly. Here's the typical progression. First, you'll receive letters or emails from the state reminding you that you missed a filing. These notices become more urgent the longer the return remains unfiled. Second, as soon as a filing is late, states begin charging penalties and interest based on when the return should have been filed. If you still don't file, the state may issue an estimated assessment, essentially guessing what you owe. These assessments are often inflated and include growing P&I as time goes on. Third, and finally, if the issue continues, states can escalate quickly by sending the case to collections, filing tax liens, freezing business bank accounts, and suspending business licenses. Yeesh. So while ignoring sales tax might feel like a later problem, the reality is that every month you wait makes the problem bigger and more expensive. So how do you get back into compliance? If you're behind on sales tax, there are structured taxpayer-friendly ways to get caught up, especially if you act before the state contacts you and before you register there. One of the most helpful tools is the Voluntary Disclosure Agreement, or VDA. A VDA allows your business to come forward voluntarily and disclose past activity and get compliant in exchange for a major benefit. The state waives the penalties. You still file and pay the tax and interest, but eliminating the penalties can significantly reduce the total liability. VDAs also typically limit how far back you need to file. Most states cap the look-back period at around 3 to 4 years, which aligns with their statute of limitations. Some states even allow your representative to start the process anonymously so you can understand your exposure before identifying your business. But not every situation needs a VDA. If your liability is smaller or isolated to 1 or 2 states, another option is to register with the correct historical effective dates and file the back returns directly. Some states will allow you to request penalty waivers with these filings, although waivers are generally more predictable with a VDA. A qualified sales tax professional can help you estimate your exposure, compare your options, and choose the most cost-effective path. But non-compliance can hurt your business over the long term. Even if the immediate financial impact doesn't feel significant, unpaid sales tax can create major problems when your business reaches key milestones, such as selling the business, bringing in investors, entering into partnerships, or applying for outside funding. And here's why. Sales tax is viewed differently from other debts. It's not your revenue. It's considered operating income. It's money you were supposed to collect and pass along to the state. So when buyers or investors review your financials and see that you owe sales tax, it raises immediate concerns about compliance, risk, and future liabilities. Even minor unresolved tax issues can delay or completely derail deals and due diligence. Getting compliant protects the long-term value and credibility of your business. With all of this said, the best time to act is now. If you suspect you may be out of compliance, here's the most important takeaway. There is no time like the present to fix it. Sales tax problems only grow over time, but states are far more flexible when businesses come forward voluntarily. Addressing it now gives you options. Waiting reduces them. If you're unsure where to begin, reach out to a sales tax professional who can help you evaluate your exposure and walk you through the right path forward. Not filing sales tax doesn't just lead to penalties, it can affect your cash flow, your stress level, and the long-term value of your business. So how do you fix those sales tax issues before the state approaches you? Well, for more information on that, check out this video. And if you need help sorting out your exposure or want a clear path to fix it, that's exactly what we do at Hands Off Sales Tax. We're standing by to help.